Good morning, everybody. Welcome to this KeytoProp webinar. Today, we're going to start a new format inside the prop. First of all, let's wait for all other to join. And well, first of all, let me know. Use the chat. Please use the chat and give me some feedback about the audio and the video, so we can definitely start as soon as possible. First of all, let me explain this webinar structure today. As I was saying, we are introducing this new format, which is inside the prop. Last week, actually, we introduced another format, which is prop in action. In that format, we will try to pass one of our challenge from on a weekly basis. So we will have a weekly webinar where we will try to trade live using one of our challenge. While in this format, which is inside the prop, we will try to explain, or better to give you some strategy that you can use in your prop trading. So these strategies are strategies that are like the main focus of the strategies is on risk management, is on what you lose on the market, what you can lose on the market. Because of course, when we are talking about prop, every prop trade firm in the world is looking for consistent trader and traders who are able to manage risk properly. So this is very important, and that's why we are trying to explain you this kind of strategy. So, well, of course, this kind of strategies can be also used in the day-to-day trading activity you have on, let's say, normal classical trading account. But of course, these strategies are specifically designed for prop trading because of what I was explaining you about the risk. So this is the new format. We will have a weekly webinar of inside the prop and a weekly webinar of prop in action. So you can have a better idea about what are the strategies that works better in the prop environment, and also you can have a close look at some real-time trades in prop in action format. So this is very important. Now let me share my screen so we can actually start the presentation. Here we go. This is our strategy. So today we're gonna discover the super channel indicator strategies. It's a very simple strategy that I would say everyone more or less, regardless the let's say the experience you have in trading, you can use this strategy almost from day one. So you can study it, learn it, and then you can use it straightforward. But of course, it's not that simple. I mean, you have to do certain things before being able to use it, like with profit. Okay. Well, the first thing, let me give you also some let's say a brief let's say let me explain you what we are, who we are, and what are the advantages using KeytoProp challenges. So this is in this slide you can find the thing that I would say is the most important one we have is the feature we have compared to the vast majority of other prop firm, and this is a very important thing. Essentially, KeytoProp is backed by a brokerage firm that is on the market since like 15 years ago. So essentially, every trader, every proprietary trader who trade with the KeytoProp is definitely I mean, you can have a lot of security if you trade with us. With most of the proprietary firm you can find out there, essentially these prop firm are not even like backed by a broker, so they are essentially a website, just a website. You can of course deposit funds, you can withdraw money if you pass the challenges and so on. but you don't know where the funds are. You don't know almost anything about the company you are giving money. So with us, we have to follow certain regulatory policies. We cannot like disappear, let's say, from one day to another, which is something that unfortunately happened to some of our clients with past experience. So this is a very important thing. Just to give you some other of our main feature, of course, even during the this is another important feature we have through our infrastructure, which is essentially the fact that we allow every trader to trade in a real live environment. So even in the challenge step, what you are going to do is, like, of course, you are trading in a demo environment, but at the end of the day, we create an infrastructure that allow you to trade as close as possible to the real live conditions. So you will have raw spreads, you will have essentially the lowest possible spread, considering that, of course, we are we are working through an ECN structure. We have, of course, institutional liquidity, as you can see here, and no price manipulation at all. We have more than 400 tradable assets. We have, of course, forex pairs. We have indices, commodities, stocks, and so on. And with us, of course, you have the possibility, if you are successful and if you show us to be a consistent trader, you can get funded up to 250,000 US dollar. As long as you prove your skills in trading, we allow you to keep up to 90% of the profit with the scaling program. So please have a look at all our challenges in our website, which is www.KeytoProp.com, and of course pay attention to the scaling program, to the scaling plan, because it's really interesting. I mean, being able to get funded from by a prop firm, and then being able to reach a split of 90% is it's very huge. So please take some time to read all the condition in our website. Of course, regarding trading platform, we give you the possibility to trade on both MT4 and MT5, so you can have also you can trade using, like, for example, Expert Advisor, script, or also indicators you create, and so on. And of course, well, this is something that more or less every prop trading firm does, which is the fact that essentially we issue official certificate upon challenge completion, and this is really nice also for every of our successful trader. Regarding the challenges phases, what we can say is that, of course, as I told you before, we are looking for consistent and good traders. So sorry, we are not like looking for like just a person who hit a couple of let's say lucky trades and pretend to be a trader. You know, to be a trader, you need to show consistency. You need to show the fact that you can essentially manage the risk in a proper way. Okay, so this is our default basic structure of our challenges. So we have this is a two-step evaluation model. So we have the phase one, where you have to prove your, of course, profitability with realistic drawdown rules. We have the phase two, where you have to demonstrate consistency, and then you can get funded. If you go through phase two, you can get funded up to, as I said before, 250,000 US dollar. Then, just to conclude my brief introduction, I want to also explain you our very briefly. Of course, then you will find all the information in our website. But essentially, this is our affiliation program. So if you are an affiliate, if you are already working for a different broker, different prop firm, please have a look at our dedicated page on our website, because we can, if you are an affiliate and if you can bring us, of course, if you can refer us clients, we can give you the possibility to create VIP deals, which means you can also give the possibility to your traders to have a completely different structure about the evaluation model. So, for example, you can have we can create for you, for the specific affiliate, we can create specific challenges with slightly different rules to be like more in line with his idea of trading, and then of course you will be rewarded for like a lifetime, actually, for every purchase that your clients do on our website. We have like 5-level earnings with multi-tier depth, which is a really interesting thing, especially if you're co-working with different affiliate. And we have one of the highest paying structure in the industry. You can double check it comparing us with our most important competitors. And of course, if you want to grow with us, the growth path is really unlimited. Now, I would say to start with the discussion of the main topic we have today, which is the super trend indicator, and actually, which is not the super trend indicator, is the super trend strategies that use the super trend indicator. Now, in this presentation, you will find like a couple of slides about the super trend indicator, and this is because I don't know how many of you are aware about this indicator. I don't know how many of you use this indicator in their day-to-day trading activity. So please, as usual, use the chat. Let me know how many of you use this indicator in their day-to-day trading activity, or if you don't know anything about the indicator yet. Because of course, if you for example, I don't know, but you are helping me for the rest of the webinar. Because of course, if I know that almost no one of you knows already the super trend indicator, I have to give you a brief explanation about the indicator itself first, and then we can go and dive into the strategy. But if the vast majority of you, of course, already know the super trend, already know the logics behind it, then we can skip that part and go into details into the strategy. So, well, yes, please use the chat. Send me some messages so we can continue. But I will be very, very brief in this explanation. So the super trend indicator is first of all, the first feature he has is that is a trend following indicator. It provides a clear buy and sell signal, like plotting a line above or below the price. So it's even very, very simple to use. And in fact, it is designed to be simple yet effective, and especially for intraday trading. It became particularly popular, I would say, between intraday traders because of its main two features. The first one, I already told you, is the fact that it is a trend following indicator. The second one is essentially the other feature it has, which is the fact that the super trend indicator adapts to the volatility of the instrument you are trading. So you have a trend following indicator, but these trend following indicators also adapt to the volatility. So this is very important for risk management, and we will discuss in more details later this point. So this is a brief overview to give you some let's say historical background. It has been introduced almost 25 years ago by a French trader, which is Olivier Seban. It gains, as I told you, traction among retail traders due to its simplicity and effectiveness. And Nowadays, you can find it almost, I would say, in every platform. You can find it on MT4, MT5, TradingView, every platform. Name it one, and you will find it. If you cannot find it on your trading platform, this indicator, you will find probably somewhere else, like on the internet or whatever, a script you can attach and you can include into your trading platform. Like, for example, MT4 and MT5 by default, these two platforms don't have the super trend indicator installed by default. What we can do is and we can also send it to you. Is very easy for us. We can find or you can find actually on internet the indicator, and you can install it on your default MT4 or MT5 trading platform, and then of course you can use it. This is the super trend formula, and this is a very important thing in my opinion, because normally, also from what I can see from our clients, let's say, nowadays everyone is looking for the magic indicator. Everyone is looking for the magic strategies, or the thing that fix everything and allow you to generate profit over profit over profit with no stop loss at all. And well, first of all, this is not possible. This is you will never find it. And another thing that I notice dealing with clients every day is that even the one who use indicators in their day-to-day trading activities, like, for example, I don't know, maybe someone use exponential moving average, just to name it a simple one, or maybe someone is using I don't know, whatever, RSI, stochastic, Eikinashi, whatever, name it, and I mean, it's the same. And what I notice is that basically most of the clients, even the one who are trading with one indicator, they don't know actually what the indicators is. So they don't know what is behind the indicator formula. They don't know the formula. They don't know what are the inputs or where the inputs come from. They just know some random parameters that have, in general, like, for example, if you use the ATR indicator for volatility, in general, you use it at 14 as a period. So 14 is your input. But even for people who use the ATR to set, for example, stop losses, or they include it in different strategies, they don't know the formula. So they don't know why 14 is a parameter that is widely used in the industry. They don't know anything. They just know the sell and buy basic logic. So they know, like, for example, if the indicator do this, I have to buy. If the indicator do that, I have to sell. So they know more or less the logic, but they don't know actually what's behind it. And I think this is a very crucial thing to know, because of course, knowing the formula, knowing very well the inputs, you can also change it. You can change them slightly, at least, in order to better adapt to the instrument you are trading. So the super trend essentially is very basic. Even the formula is very basic, and it's everything is based on two inputs, which are the ATR, the average true range, the very famous indicator, and the multiplier. You can set these two parameters as you want. Normally, the parameter for the ATR period is 10 to 14. I use personally 10 on most instruments, and the multiplier can range between 1.5 and 3.5. Normally, as I trade on mainly on US indices, I prefer to use 3 or 3.5. 3.5 for the for instruments which are, let's say, more volatile, and 3 for instruments which are less volatile. This is the formula. So every second you have essentially two bands, the upper band and the lower band, and of course, depending on where the price is, considering these two levels, the super trend will be green or red, signaling an uptrend or a downtrend. The basic upper band formula is the high plus the low divided by 2 plus multiplier times ATR. So this is the very basic formula of the upper band. The lower band formula is essentially the same, apart from the fact that, of course, you need to subtract instead of add multiplier times ATR. Okay, so this is the formula. Let me know if everything is clear until now. And let's move on. Just giving you the main logic of the indicator, and then we will jump into the strategy itself. So the basic signal logic is very simple. So as we said, the super trend indicator is a line which is plotted on your chart above or below your the price. So when the price is close above the super trend line, we have a buy signal. When price close below, meaning actually like the candle or the bar close, like the closing price has to be below or above. In this case, if it's below, we have a sell signal. And when we have, for example, imagine the super trend is green, we have a bar which closes below the super trend, so we have a sell signal, and from that point on, the super trend is going to be red, signaling a short trend coming. Okay. Regarding visual characteristics, it appears, as I told you, as a continuous line, green for long trend, red for short trend, and always follow the price, adapting to the volatility of the instrument. So, for example, if we are in an uptrend, but the volatility is rising, the super trend will tend to be will tend to not to move, because the volatility is huge. As soon as the volatility come back, the super trend will stay closer to prices. Okay, this is the logic, and this is why we use the ATR and the multiplier input. So here you can find some of our some of the best practices we use to implement these strategies. Of course, this is an intraday trading strategies. You can use it also the super trend to use on to trade on like daily charts or 4-hour charts, 1-hour charts. But I mean, we prefer to use it in an intraday for an intraday perspective, let's say. So we use it on 1 minute to 15 minutes time frame charts for indices and NFX pairs. We, of course, we cannot use it as it is. Like we cannot use it as, for example, I don't know, as a strategy. We cannot use these strategies as a fixed protocol. Like, for example, we cannot all the time simply see the signal and then trade, because we need to consider a very important thing in trading, which is the context. So never trade without analyzing the context and combine the trading signal you have from your strategy or from your indicator. You need to combine it with the general price action around that area. You need to combine it with the typical support and resistance zone and so on. Like, for example, I'll give you a very, very brief example. Imagine the super trend is red. We are at the bottom and the super trend turns green, signaling the potential begin of a new trend. If in that point, like at a distance of, I don't know, 5 points, for example, on the S&P 500, you have a huge resistance, a huge static resistance on the chart, of course, you can also consider not to open that trade, because what is signaling the super trend is definitely true. It's definitely signaling that a potential uptrend is coming. But at the same time, you have a strong resistance level, a strong statical horizontal resistance level within a very, very few points. So potentially, you can wait until prices for break that resistance as well in order to go long. Okay, so you need to adapt like the signal you have and the context you have. Of course, this is this is the first thing we said at the beginning of the webinar, like introducing the indicator. This is a trend following indicator, so you cannot use it for trade in like choppy markets. Okay, if you use it in sideways market, most of the time you will get stopped out continuously because, of course, it's a trend following indicator, so you have to use it in trend following market. Then if you want to trade on choppy market or sideways market, you can do it, but you have to use different strategies and different indicators. Another very important thing to do is study the instrument you are trading on. So again, you cannot trade using any strategies like in the same way. So for example, if you use these strategies on Nasdaq, you need to study certain things and to analyze certain things. If you do the same on the S&P or on euro dollar, you need to consider other characteristics that are specific for that instrument. Okay. As we know, for example, if I compare Nasdaq and S&P, what is the most evident or the most let's say difference between these two indices? What is the most important difference? The most important difference is definitely the volatility. Nasdaq has a definitely a higher volatility compared to the S&P. Again, the S&P has much more volatility compared to an FX pair, for example, and so on. So always study the instruments you are trading on, and I'm gonna give you some details later on. So this is the last slide. We can, I mean, it's not actually the last. Yes, last slide. I would like just to show you here the visual appearance of the indicator. So as you can see here, like for example, starting from the left hand side of the chart, the trend was an uptrend. The indicator was green. Then it turned red, and we have the first sell signal. Then it turns green, and we have the second buy signal. Then we have another sell signal here, and then in blue I've highlighted a very interesting occasion we can find with this indicator without waiting for the price to break the line of the super trend. So most of the time, if you are like, for example, in an uptrend and the prices retrace and retest the super trend when the super trend is in a static position. So for example, here is moving, here is static, here is moving, static, moving, static. When it's static, like for example, when it remains at the same level for a certain period of time, and the prices retrace and try to create a kind of pullback on the super trend line, this is a very interesting long opportunity. And the main reason is the fact that you can use or you can have a very, very tight stop loss, because the stop loss is going to be, for example, if you go long here, your stop loss is going to be hit once the super trend will change the color. So once a candle breaks below this level. Okay, so as you can imagine, the super trend is, the stop loss is very tight, and the potential risk reward is very huge. Okay, now let's discuss the strategy, and let me, give me a few seconds to. Okay, here we go. This is our platform. Of course, this is our best challenges that we started for the other format I was explaining you. So which was the prop in action format where we trade live. We started this challenge just 1 week ago. So we are at the very beginning. We have it's a long way for the target for passing the challenge, but we are trying to do our best during the live we are doing on a weekly basis. But anyway, this is the super trend indicator. First of all, I'm going to show you the input I'm using. Okay, just give me a second. So as you can see here, I'm using an ATR multiplier 3.5 and an ATR period of 10. Okay, these are the settings I use to trade with the strategies on Nasdaq. Okay, so if you trade, for example, using these strategies on US indices, you need to consider something. You cannot use, or well, in my opinion, it's best not to use these strategies all day long. You need to consider only the regular trading hours. Okay, only the RTH segment of the day for trade. The extended traded hours, I don't like to trade during these hours because I mean the cache is not open. The US cache is closed, and when the US cache is closed, I mean there are like super low volume, super low volatility, and I don't like to trade in this kind of environment. So in this chart, what you can see here, you can see, of course, the dash line here, the vertical dash line is the line that separates every day, so every session, starting from the end of the day. And the red line here is the start of the cache, the US cache. For example, and you can see is 4:30 p.m. because we are. I mean, our platform is GMT +2. Is working in GMT +2. So this is the US opening bell. Let's say. Okay, and I place it here just to highlight you when we have to use the indicator and when we do not have to use it anymore. The indicator. So what's the idea of the strategy? Well, the main idea is very simple. It's like we have to follow the basic logic of this super trend indicator. Okay, we have to follow the very basic logic of the super trend indicator. I'm gonna show you what we are doing here. So, okay, let's say we are here. Okay, what happened? For 4:30, so we have the US opening bell here, and then what we have to wait? We have to wait the first changing color of the super trend. So we have to wait, for example, in this case, the super trend before the opening bell was red, so we need to wait until it changes green. So what happened? It changed green when we need to wait, as we know, for a closing for a close above the super trend. The first close above the super trend is this one, right? Okay, so what we do from here? From here, the strategies and the strategy, and this is like when we have to think about risk reward, we have to think about risk management. What I like to do is normally I like to enter a long trade here for a certain size. The most important thing about this certain size is the fact that has to I mean, you have to be able to split the trade after you get in the trade. So, for example, if the minimum size here for us, for example, the minimum size is 1, okay, I will never trade 1. I want to trade 2, so the double. Why? Because at a certain point, I will have the necessity to close. Oh, okay. I think now you can hear me again. Sorry, I had a small issue with the connection. But anyway, I was saying that I like to enter in the trade here with a certain amount, like for example, two contracts on Nasdaq. Then I like to place well, for the stop loss. You have two choices. One is riskier, the other one is not. So let's say the more conservative one. So a trader who is really focused to like not to lose as a first thing will place. Well, let me highlight a bit this line. Otherwise, it's very difficult for us to. Sorry. Okay, this is our entry. Let's say point. So sorry. We can. I was saying we can place our stop loss. The let's say the conservative way to place your stop loss is below the low in this case, or above the high of the bar that give you the signal. So for example, in this case, if I buy here at this level, I will place my stop loss down here. Okay, but the most important thing is not the stop loss, is the take profit. But okay, so this is the more conservative way to place the stop loss. The less conservative way to place the stop loss is wait for the super trend to be horizontal on the other side and place it down here. Okay, so some points or some pips if you're trading forex and so on below the opposite side of the super trend. Of course, in this way, you will risk more, definitely, but at the same time, you have also huge potential from your trade. What I like to do is like don't have these kind of quite large stop losses. So I like to place my stop loss just a couple of points, 2-3 points normally. When well, while I'm trading, if I'm trading CFDs, normally I use 3 to 4 points on Nasdaq because you can have some spikes or some slippage sometimes. So it's better to be, a bit conservative. But then this is the key of the strategy. So we said we enter here. Sorry, I would like to show you. Okay, we enter here, and we can open also the. Just give me a second. I would like to. Well, it's not needed, I think. Okay, no, where is it? So we open the trade at here for double your ideal size. So let's say 2. Then we have to try to discover, like studying the instrument, studying every signal that you have in the past. So backtesting, actually. But I'd like to do, for this kind of strategies, I'd like to do a visual backtest. So what I'm doing is like I'm saying, okay, I go long here. What is the minimum amount of points that the price move in my direction before retracing or before pulling back? So from what I can tell you is that, like on Nasdaq, more or less, I did these studies based on future prices, so on Nasdaq future NQ, and not on our CFDs, to be honest, because, like, of course, prices are slightly different. This is a spot instrument. The future is a future instrument, so it's. I mean, I've studied these strategies not exactly on the same data, but to give you an idea. Almost 100% of the time we are around, let's say, I would say from 75 to 95% of the time you can have like a continuation of about 10 points on Nasdaq on this kind of time frame. We are on 3-minute charts. Okay, of course, if you are trading on 4-hour charts, you will have a higher number of points. But why I would like to understand how much is this number of points, because this will be my first take profit. So, for example, if I would like to enter here, just give me a second. Okay, let me open the data window. Okay, here we go. Okay, perfect. So for example, this candle here closed at 23,249.73. So I place my stop loss 10 points above, so which is 259.73. 259.73. Just give me a second. 59 and something. Okay, let's say here. Okay, so this is our stop loss. This is our take profit. What happened when the position hit my take profit? I do not close the whole trade. I close just half of the trade. Okay, I close just half of the trade. Why? Because my idea, imagine we open here at 249. We close one contract out of 2 at 259, which is our first take profit, because we set 10 points on Nasdaq on these time frames. And what I do is that I move my stop loss from here. So let me highlight the stop loss. So let's say the stop loss is in light blue. Okay, and then I move my stop loss here. Okay, so I can move my stop loss to break even as soon as I reach the first target. Why? Because, for example, in this case, I hit the first target with my first contract, and the second contract is going to be stopped out at break even. So I don't lose on the second contract, I gain on the first one. This is very important. Okay, this is the logic. And let me know if it's if it's clear, so we can also continue. And I'm gonna also show you. I'm gonna also show you other, let's say, opportunities. But well, first of all, well, we can check, for example, for the same day. So, for example, the same day, you see what happened. We had a huge uptrend for all day, and we have also another potential trade at the very last, let's say, minutes of the trading day. So imagine we open the short, so we can give you also the short, let's say, side. So we open the trade where here we open the trade here. Our first take profit is going to be 10 points lower, so 71 and 71. Okay. Okay, and this is the exactly the same situation. So I place my stop loss here, which is a couple of points above the high, in this case, of the candle of the bar who give me the signal. I enter, I open a short trade at a closing price, at a closing price of the bar who gave me the signal, and my first take profit is going to be 10 points lower in this case. As soon as my first take profit is going to be hit, I'm going to move my stop loss to break even, and the stop loss is going to be hit exactly here. So even in this case, I have the first trade in profit, the second trade stopped out at break even, but I'm not losing. And this is the very important thing. This is a key thing for prop trading. Okay, so we can also continue, and we can I can give you other other details, but like, for example, this is a very important thing, and that's why you need to consider also the context and what's going on the market. You cannot just open your trade like because you see the signal, you know. So, for example, look at this case. This case we have like 76. This case is a stop loss, okay? Because stop loss, we have always some couple of well, actually, I don't know if this is a stop loss. It's a very close one. This one we need to double check. Okay, maybe it's not a stop loss. Let me know. Let me see. Sorry, that's a window. Okay, so the closing price here is 376.48. 376. Okay. For okay, which was 48. Okay. Okay, and then we have to check the high of this bar. Oh, that's very close. That's very close. It's almost like the height. It's less than 1 point. So we in this case we didn't hit our take profit for like just a couple of it's less than 1 point, as you can see from the data window, and we get stopped out below this level because our initial stop loss is sorry, I deleted by mistake, but our initial stop loss was placed down here. Just give me a second to reuse the dark blue, sorry, the light blue. Okay, then the same day, so we have one stop loss, then the same day we have another potential trade. So we have a bar that closes way below the super trend. This is clearly an excess. Okay, look at the surrounding bars or candles. Like you cannot find a single bar which is so extended, which has a range that is so high. Okay, when you see the super trend, which is which is broken by a bar which is significantly higher in range compared to the one which surround it, you can also skip the trade, because I don't want to. Let's say the most important thing is entering the trade at a price that is not too far from the super trend that has been broken. Okay, so for in this case, for example, what I can see here is that I should enter in the trade more or less at 298, and the super trend was at 320. Okay, so is more than 20 points. Okay, and I don't like to enter short. At this was also the lowest low of the trading session, and I don't want to go short at the very low of the trading session, especially considering that the super trend has been broken by a significant amount of points. Okay, then the rest of the day we have another interesting opportunities here. So you see we have the bar who close the who close above the super trend. So we have our buy signal exactly here. Okay, 3.8, and then we have 9. Okay, here we go. So imagine the situation, because this situation is very interesting, and that's why we are using not a single contract but a double contract all the time, or anyway a size that you can split. This is very crucial. So we open the trade here, we close our first half of the trade here, and as soon as we close the first half of the trade, what we are going to do is we will move our stop loss to break even. Okay, and we leave open the other trade. Now what happened? Because it's really important. This point is really important. So what happened? So first of all, let's because now we have to, when you do this kind of back test, you have to be really let's say precise. Okay, so we have our 10 points. Okay, we close our first part of the trade, we move our stop loss and break even. Then what happened? Prices move again in my direction for other 10 points. Okay, so my segment is always 10 points on Nasdaq 3 minutes. So 48, 58, we go to 58. So it's other 10 points. Okay, 10 points. Now I'm in with only one, let's say one contract, right? So I'm in another 10 points. When the price reach or like move other 10 points, what I do is I do not close, of course, any trade because I have only one left. But what I can do is I move my stop loss at break even at the next level. Okay. Here, probably it depends, of course, it depends where you stay. If you stay like real at break even, you are still in your trade, because of course you see the low didn't touch this level. Okay. Then what happened? Prices retrace again, start a new trend, and move up of other 10 points, right? Because it reached the 68, which is here. Okay, so as soon as you reach other 10 points, I continue to move my stop loss. I continue to move my stop loss above and above and above, and I continue until it will be hit by the prices. So in this case, for example, we have with the first trade, I mean, you have 10 points with the first trade. With the second trade, actually, you have 10, 20, 30, at least 30 points. Okay, so this is the strategy. This is pretty much the strategy. I think, I hope I've been, let's say, clear, and I hope that I explained you the strategies in a good way, in a comprehensive way, in a way that you can understand and you can use it. Of course, all the strategies can be, let's say, can be used also as an expert advisor. So you can use this strategy, implement it automatically in an expert advisor, and you can start using these on your prop trading account or in your day-to-day trading activity. In my opinion, is very effective, because you are always like in line with the trend. You are always trend following. You never trade the counter trend or in mean reverting, which is something that it's very, very difficult to do. Only very skilled traders are able to trade properly and profit, and with profit with a mean reverting system. And you are never against the main trend. You follow the volatility, and but of course, what is crucial? It's crucial to study the instrument where you would like to apply this strategy. Because, for example, imagine I'm doing this on the S&P 500. The S&P 500, these 10 points can never be the same. I mean, it's impossible, because the S&P 500, the volatility on the instrument is much lower. So, for example, the S&P, you can consider, I don't know, 2 points, 3 points, maybe, for example, to build these kind of steps. Then you have to, of course, to analyze the context. Okay, you have to analyze the context. You have to analyze the time frame intended as the let's say, yeah, the most important hour, or the most effective hours you can use this instrument. So, for example, if you are testing the strategy on an instrument and you see that during the nighttime, or for example, like during the morning, the strategy is I mean, it fails constantly. So it means that probably on that specific instrument you need to use the strategies on a different hours, on different hours. Okay. So, well, this is pretty much all, I would say. I don't know if any one of you has some question, and please, of course, let me know using the chat if you have any question regarding the strategies. Of course, we will use this strategy in our live, in some of our lives, live trading in the other format, so in the prop in action format. So you will have the possibility, of course, to see this strategy in action, actually. And please, of course, remember also to follow all our channel. You can follow my channel, which is on Telegram. Matteo Marchetti Telegram is called, and of course, but do not forget to follow all our social media as KeytoProp. So you can find us on YouTube, Twitter, Instagram, Discord. You can find it as anywhere. So, like, please subscribe, and of course, like, in this way, you first of all, you are aware when we are live, so you can follow us like very, very quickly, and in this way you are also aware about everything we are bringing on the market, every update. We are working so hard to give you a very interesting infrastructure where all our let's say prop trader can trade, can get their payoffs, and so on. So we are doing a lot, and well, I would say the webinar, it's over. Just give me a second to share again my screen. Okay, and well, here we go. I would say I hope you enjoy the webinar. Of course, I hope you enjoy the strategy, and I hope you can try to test the strategy by your own. If you have any question, do not hesitate to contact me. I can give you, of course, additional tips. Like we are doing a webinar in 1 hour. It's very difficult to explain and to give you all the tips about the strategy, all the small details, all the small changes you need to adopt in order to be really, really constant and profitable using these strategies. But so it's very difficult in 1 hour webinar. But of course, if you have any question, please feel free to contact me on Telegram or via email or whatever, and we will keep in touch, and I will help you to reach your goal. That said, I would say the webinar, it's over. So enjoy the rest of your day, and I'll see you in our next webinar. Bye bye. Have a good day.